All right, good morning, everyone. Let's get going here. Sorry for a bit of a delay. Somehow probably one of my children managed to close out my notes from last night, so I'm kind of empty-handed at the moment. Let me just try to remember some of the stuff I was going to go over. Okay, I think I remember everything. All right, let's keep going. Sorry. Okay. S&P yesterday, we gave another test of resistance at 1850 in the earlier session, and then you can see there right at the beginning of the day, and we really failed it and ripped down quite nicely at the beginning of the day. Kind of quite a predictable move, I suppose. You always knew they were probably going to come back and test it, and when it couldn't go, it would really sell off, reasonably. Then we really just drove back up. Off of that initial sell-off and retested the level again at 1850. Actually got through it for a little bit again, and then managed to just drift back lower. I think this price action right now is really telling. I think we've actually got a very big move coming rather soon in U.S. and worldwide indexes at the moment. We had the Richmond Fed numbers that came out yesterday. Were a little bit disappointing, as well as a decline in consumer confidence. But guys continue to blame the bad weather, which is probably feasible. But it's really hard to get an accurate reading right now of the data because of the how poor the weather's been. We also had earnings out of Home Depot, which were relatively positive. And other than that, very little to kind of go on the day. In Asia, we had mixed action. We have the Nikkei and the Shanghai indexes that's kind of coming off after hours. After the fact this morning. I think everything was up a little bit this morning, and then we had a bit of a reversal out of those two indexes. Shanghai down now almost 1%. The Nikkei down 0.5%, and we had the Japan. I think that kind of held up a little bit this morning as well on the back of the yen that weakened out a little bit early in the session. But I think bottom line is same sort of thing that we've been talking about. China is continuing to struggle. This morning again we were in the green in China, and now we're down about 1%. We continue to see the same sort of pattern. So mostly a non-event in Asia at the moment, but China I think maybe whispering things to us. All right, we had Imperial out this morning, headline earnings per share looking a little bit light versus Bloomberg consensus numbers. Revenue number looks like a bit of a beat and a 10-cent beat on Divvy, but headline earnings per share definitely looking a bit light. Their outlook, they said it will be difficult to achieve growth in 2014 financial year as we expect our vehicle distribution activities to be under pressure in the second half. So that's actually quite a negative statement out of the company there. We'll have to see how it trades this morning. We know that we've been showing that chart a little bit in the band between 160 and 170. If we move out either side, there'll be a play there. But until then, I think we sit and wait. We're also expecting Growth Point out today, looking for headline earnings per share around 81 cents, revenue at 3.23 billion, and Divvy per share at 78 cents. And then we're looking for Centum as well, earnings per share looking for 9 Rand 15, and Divvy per share at 4 Rand 30. All right, market data out today. We have the German consumer confidence numbers. We also have the UK GDP numbers. And then later in the States, we have mortgage apps and new home sales. So very little to kind of go on. Also, if we just have a look here, just looking at something coming across on the Bloomberg terminal, Nedbank was raised to buy versus neutral at UBS. So just keep that in mind. All right, let's get on to the maps. All right, what I wanted to talk about this morning is just about some of the failures in general that we're seeing at the moment. When we talk about these kind of things, I think it's really important that you kind of put a timestamp, if you will, on some of the trading activities. The U.S. has been kind of pushing up against 1850 over and over, over the past, you can see there going all the way back to the new year. We really reached the highs right at the beginning of the year, and we're flatlining on the year so far. So until we can kind of punch through this level, I don't, it becomes a bit of a drag in terms of, you don't have any fund managers and things like that have to chase performance and that kind of thing. So if we're not able to get above this 1850 level at any time reasonably soon, and when I say reasonably soon, I mean maybe even in the next day or two, then I think that people will start to view it as a fail, and they will either look to take profit or to get short. So when I say we put a timestamp on, I mean we've got a somewhat limited amount of time, but before the markets start to get worried that we don't break out. So the last 2 days we both got above. As you can see there, if we zoom in even more, last 2 days we got above this resistance level on an intraday basis and failed it intraday. It's going to be really important to see what happens, over the next two sessions. Like I said, the next one we're going to look at here is the FTSE. The FTSE also, we narrowly got above this resistance on a closing basis day before yesterday, and then yesterday we failed it. We're looking for a lower open right now, looking like showing about 16 points lower on the FTSE, and this is a big fail. If like we said, if the S&P fails, if the FTSE fails, and we start to drop out of that sort of trend line, it's negative. Obviously, like I said, we've got a very short amount of time that I think the market will accept us to fail it before they start to really attack it aggressively. The next one's the Aussie. Obviously, we're opening up a little bit this morning, but you can see there, same sort of thing. The failure to kind of break out. I mean, we did get up, but it wasn't able to really punch through, and then all of a sudden we kind of failed it on yesterday's session. We're looking at about 42,535, call it. I think I would put it somewhere in that region, which is about 35 points higher than where we are at the moment. If we can't punch up above that, also same sort of thing, be looking at a fail, and I'd put some sort of timestamp on that. All right, the next one we're going to look at is spot gold, and I want to look at this is a year chart here. We know 1350 is a monster level in gold. You can see there, it doesn't get much more clearly defined than that. And we're pushing back up, obviously, toward that level. Interesting thing is, the gold miners have been struggling the last couple of days to really punch through. We always talk about how the shares lead the underlying, meaning that the shares will run before the actual commodity price will run. And I think that they may have already priced this thing in to a move to 1350. But watch this closely. I think if we hit 1350 or get right up there close and reverse off of this level, then I think we could see a turnaround to the downside in these gold shares. So watch this one really closely at 1350. And obviously, if we break to the upside, I think it'll be we could see a significant move as well. So watch that 1350 level closely over the next few sessions. And I mean, remember, from the first of this year, we've had a $150 rally in the price of gold, so about call it 12%. This is a nice move. All right, so the next one we'll show is Gold Fields. Gold Fields wanted to just show from I'll try to zoom in on this a little bit. You can see there, obviously, we're making a bit of a bull flag off of a longer-term downtrend. A bear flag off of a longer-term downtrend. And you can see there, in terms of trend support, right at close to where we closed yesterday, 41.86. I mean, you might want to put this level, call it 41.50. We dropped 41.50, which we did drop, or we are below where we closed in the States last night. And this thing could definitely be dropping out of support on this bull flag, and could be giving us a bit of a lower target in Gold Fields. All right, sticking with the mining theme, Kumbaya also making a bit of a potentially, I mean, I wouldn't call this a bear flag, but it kind of almost looks a little bit like a flag pattern. There has been this consolidation that's been happening for the better part of a month now. But bottom line, we haven't really dropped it yet, but we're pushing right up against support right now. Yesterday we tried to really poorly drop the 200-day moving average. Like I said, things I think are people are starting to get worried about China, and I think what could be the trap here is that this thing's got this big divvy coming, I believe next week, a 20 rand divvy, and so like similar to the special div that we saw in ABSA, which was the Grim Reaper for a lot of people. I think a lot of people could be piling into this thing to collect this divvy, and only to be kind of catching it at the most imperfect time. So just be careful. This one, if it drops that support, it could fall further. The last one I'm going to show is Exaro. Exaro coming back down to the neckline of this head and shoulder pattern. We're basically looking right at 146.50 is that number. Yesterday we closed at 46.56. So we literally only hanging on to it by a thread. I think if we can drop, I would call 146. If we can actually drop below 146, then I would say that we can trade back down toward the lows of the year, closer to 137, over the next few sessions. But it has to drop this level. And that's it for today, guys. Thanks a lot.